Hello, I'm Ron Wilson and welcome back to PD Sessions. In the face of weak growth and sluggish investment, the RBA finally decided to trim the interest rate to the lowest level since it commenced setting a cash rate target back in 1990. In international news, East Asia remains the world's fastest growing region, and in Europe, the Governing Council of the European Central Bank has announced an expanded asset purchase program. In other news, the ATO found that 45% of Australians who hold money in a superannuation fund have more than one super account. Trevor Trahan has the details.
After 18 months of rates on hold, the RBA lowered the cash rate by 25 basis points to 2.25% at its February board meeting. The move to the lowest rate since the RBA commenced setting a cash rate target in 1990 is designed to stimulate business activity and household spending in the face of weak growth, falling commodity prices and sluggish investment. RBA Governor Glenn Stevens said growth in the global economy continued at a moderate pace in 2014, but in Australia, the available information suggests that growth is continuing at a below-trend pace, with domestic demand growth overall quite weak. New figures from the ABS indicate that year-on-year retail turnover increased by 5% in November 2014, while month-on-month retail spending saw a 0.1% increase. Australia's upwardly mobile property market has contributed to the retail sector experiencing what's expected to be one of the highest growth years since the GFC. In terms of turnover by industry for November, the ABS findings were cafes, restaurants and takeaway food services up 0.8%, food up 0.6%, household goods up 0.6%, clothing, footwear and personal accessories down 0.7%, and other retailing down 2.1%. Just 33% of Australian home buyers asked for a second opinion on their home loan, according to a survey by Aussie Home Loans. Price, location and type of property are almost twice as important to home buyers as shopping around for the right home loan, the survey suggested. Overall, based on survey responses from more than 1,300 home buyers, they were much more likely to prioritise price of the property. 73% saw this as very important. Location, 65%, type of property, 62%, size of property, 54%, proximity to amenities, 51%, and size of the backyard, if any, 39%. With GDP growth estimated at 6.1% in 2014, East Asia remains the world's fastest growing region, according to the UN's World Economic Situation and Prospects 2015 report. This compared with the global economy, which is expected to grow 3.1% in 2015 and 3.3% in 2016, with an estimated growth of 2.6% for 2014, according to the report. The report stated that China's transition to more moderate growth is expected to be partly offset by higher growth in other economies, where investment and exports will likely strengthen as activity in developed countries improves. The US Federal Open Market Committee, or the Fed, found that economic activity has been expanding at a solid pace, and that the current 0 to 0.25% target range for the federal funds rate remains appropriate. At its December meeting, the Fed stated that labour market conditions have improved further, with strong job gains and a lower unemployment rate. The Fed expects that, with appropriate policy accommodation, economic activity will expand at a moderate pace, with labour market indicators continuing to move towards levels it judges consistent with its dual mandate of full employment and price stability. The European Central Bank's Governing Council announced an expanded asset purchase programme aimed at fulfilling the ECB's price stability mandate. The programme will see the ECB add the purchase of sovereign bonds to its existing private sector asset purchase programmes in order to address the risks of too prolonged a period of low inflation. Despite the likelihood of the federal government missing its May 2014 budget forecasts, it has maintained its AAA credit rating. Standard & Poor's explained that its unsolicited ratings and outlook on Australia were not immediately affected by the government's mid-year economic and fiscal outlook for 2014-15. That outlook showed the deficit has blown out to $40.4 billion for 2014-15 from the $29.8 billion predicted in the May budget. S&P stipulated that the main reason for maintaining the rating is Australia's overall net debt to GDP figure, which remains relatively low compared with other countries. ASIC secured 348 enforcement outcomes in the final 6 months of 2014, according to Report 421. Those 348 enforcement outcomes, which all took place between 1 July 2014 and 31 December 2014, included criminal as well as civil and administrative, such as banning or disqualification actions, and negotiated outcomes, including enforceable undertakings. ASIC stated these outcomes were achieved across the financial services, market integrity, corporate governance, and small business areas. Of the over 14 million Australians with money held in a superannuation fund, approximately 45% of these people have more than one super account, according to the ATO. As at 31 December 2014, there were a total of just over 6 million lost and ATO-held accounts with a total value of just under $16 billion. This decreased by over $800 million in the 6 months to 31 December 2014. APRA's latest report on life insurance industry performance found that life insurance lapse rates continued to rise in the 12 months to 30 June 2014. According to APRA, the worsening lapse experience can be attributed to a number of factors, including a declining need for risk insurance by aging baby boomers, stronger competition in the market, pressure on household budgets leading to some pruning of discretionary expenditure, and the longer-term impact of premium rates that automatically increase each year with age.